The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Friday, 9:06 a.m., 24 minutes to go until the opening bell. And we got markets accelerating lower. A little bit of a chop yesterday, and boy, we're getting some follow-through today, though. How about 260 points in the S&Ps? How about almost 3,000 points in the Dow? And you're talking about right now more than 1,000 points in the NASDAQ 100. We got volatility to the downside. We got follow-through. We have some inflation numbers, but we get into the numbers in the equities. S&Ps right now down 30 points. Now, we did get a little bit of a pop following those numbers in terms of there's your 830, and let's get into those 830 numbers. So it's the Fed's preferred inflation gauge, the PCE, and the number comes in at a little bit soft, 0.1% versus maybe 0.2. Core, 0.1 versus maybe 0.2, the estimate market was looking for. Year over year, 2.4, light by a tenth. Core, 2.8, light by a tenth. And consumer spending right in line at 0.3%. So we'll get into those numbers a little bit more. But what happens? You have inflation coming in light. And again, following the logic, right? If inflation is not a problem, then that would allow the Fed to cut further into the future, or it would be less of a problem for the economy overall, right? So markets, they catch a little bounce on that. We were lower. You have the S&Ps all the way down to 58.66. Nonetheless, right now we're trading at 59.02. NASDAQ 100, you were all the way down to 21,006. Yeah, you're talking about almost 1,400 points, almost 1,500 from where we were early Monday. Now, NASDAQ 100, keep your eye on this 21,000 mark. You are back to where you were July 12th. It's been quite a year for the markets, but you're talking about now, 5 months of chop. And boy, within that chop, you had to run from 17.3 to 22.4. But meanwhile, we are right back to where you were, and that high is a critical area. You break below here, you see how quickly this market can trade down to 18,000 in the NASDAQ 100, and we came down and we hit a low of 21,006. For context, the high on July 11th is 20,983. So you're talking about what? 23 points in the NASDAQ 100 away from hitting that high. That's an area. We'll see if it holds. A little bit of support. You catch a bounce at that area. But boy, volume picking up in the NASDAQ 100, right? Yeah. S&Ps as well. The volume spikes the last couple days. And we'll see today. Today could be a big one as well. We got markets in negative territory. Bitcoin trading lower. Giving it up to 95,000. Bitcoin trades all the way down to 92,000. Yeah, how about that? What is that? A 15% pullback over 4 days from 109,000 down to 92,000. You're talking about 17,000 on a, quite a pullback for Bitcoin, but nonetheless, we're just chopping around between about 90 and 100 to 110 on Bitcoin, lower this morning. You have crude lower as well. Continuing to chop between about 68 and 72. We're trading at 68.88 in the price of crude. Gold, a little bit of a bid as we get a little bit of a reprieve. All right, you see the move that we had yesterday, some volatility. We're at 26.28. You did get a 25 handle briefly on Wednesday, and then back near the lows of 2,600 yesterday, and we're trading just off that price level. Now, you take a look at yields. We're at 4.5% right now in the 10-year. A little bit of a bounce, okay? What were we approaching? We were probably approaching, my goodness, almost 4.6 on the 10-year. What did we hit? Hold on one second. Let's take a look. What was our high? 4.59 was the high yield yesterday afternoon. And we're back to 4.5% right now. But on a longer term basis, what did we do? All we did was a 382 bounce, and we break the B point with volume. And you want to see something, folks? Check this out. If you're talking about an A to B, C to D, okay? Talking about the move we had in September, down to these lows, back to the 382. You're talking about a move that could bring you 4 full points lower to 105. And where does 105 bring you? right down to this low. Isn't that remarkable? So what that's looking at is if this is a 382 move that we just had, that's an A point of the run that began at 115, and we broke below it with force, man. That's how you want to see that point broken, right? You retrace to a perfect 382 retracement, and then boom, you crash lower. And if that's the case, we'll see how we behave right now. But we are getting follow through in these markets following Wednesday's action. Yesterday, saying, do we get follow through? You got chop yesterday. Today could be the follow through day to the downside, even with some soft inflation numbers for the Fed's preferred inflation gauge. Guess what? The market's saying no. We're going risk off right now across the board with markets accelerating lower, and we'll see if yields continue higher. But boy, that's a dicey one, and it puts you right at the mark that we were at, as I mentioned, at 105. There it is, right? 105.05 or about, and you're talking about the lows hanging out there right at that level. And where would that bring us to? Yeah, that would bring us up to almost a 5% yield, right? What was that? Yeah, it was October 2023. That would push us to almost a 5% yield. We were at almost 4.6 yesterday. All right, we take a look at gold. Let's jump on the gold. So what do we have? We have yields up a bit, right? We have the dollar, we have yields down a bit, a little bit of a reprieve. We go from 4.6 to 4.5. Okay. We have the yields dropping a bit, and what's that going to do? That's going to put a little weakness in the dollar. We back off a bit. Boy, that was quite a move, though, following the Fed from 107 to 108.50. You take a look at the daily on this thing. You break above the recent highs. You even take a look at the weekly. That is quite a weekly bar as you are trying to break away. So 108.06. We're above these highs. We pull back, but on a weekly basis. If this is a breakaway, now you can see that this correlates in the same way to the A to B, C to D, to lower prices and yields that I just showed you, right? You could be getting a breakaway. We'll put it back to a daily in the same way that I showed you on yields. The way you break above this B point, all right, and you got to go from that would bring you up to 111 if that's the move. No, it would bring you up to 113. And look at this, man. So if we get that type of move, you're talking about maybe, I mean, it's been a move. We'll see. But we're breaking above the B point. You're back above 108, a little bit of a reprieve. And then you jump over to the gold contract, and gold up by $21. Because what do you got? You got a little bit of dollar weakness. But all things considered, it's been quite a run since December 12th. You're talking about 8 days ago, gold was trading at 27.61. We're trading at 26.29, and we just got a 25 handle in that gold contract. All right, we jump around to some of the Magnificent Seven as we kick things off. Amazon held off well yesterday. They're going to open down almost $4 today, though. You're going to open at 219 and change. You're going to open below where you were on the lows of Wednesday. Yeah, they were outside of the market. They had a positive day yesterday. All the way down to 216. Look at that, a $10 move from where you were intraday yesterday on Amazon to 216. There's no hiding in this market, man. You know, there's no hiding in this market when you've had the runs that you've had. All right, stay tuned, folks. We'll jump into some of those PCE numbers a little bit further. We get back. We'll take a look at some equities. We'll take a look at Nike as well. Don't go away. Friday trading. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Apologize, Al. Thank you, pal. We're back. S&P's off by 30. I had the mic muted there. Apologies. NASDAQ, yeah, keep your eye on that 21,000 mark. Had that one on the chart for a while. We're trading at 21,215 right now. You're up 200 points from those lows, right? The NASDAQ, we were down 1.5% coming in. Things are accelerating. Market was worried about the PCE number, and we got a reprieve. But nonetheless, you know who's not getting a reprieve today? Novo Nordisk. So this is quite a decline. And the weight loss drugs, you talk about the ultimate growth stocks, the ultimate promise of future. Novo Nordisk down 24% at one point right now. We're down to, let's put it on the 15 minute, to $82. We were all the way down to 73. Okay, so we're trading at 82. We go back to the daily. It's down from 148. They come out with trial information for their weight loss drugs and reduced their weight by 22.7%. The market had priced in 25% already. They told CNBC it had previously forecast 25%, and they're at 22.7. Not a huge number, but the market seems to say it is. Okay, yeah. You have shares of rivals trading higher, as it seems like they might be losing their throne out there. We're encouraged by the weight loss, demonstrating superior over both. So the phase 3 trial, 3,400 people, 68 weeks. By the end, 57.3 of the patients treated were on the highest dose. But yeah, you know what's remarkable here is I was listening to Bloomberg this morning. So check this out, right? This company is in Denmark, which has a GDP of 404 billion. And you look at this company, and you're talking about they have 4.4 billion shares outstanding. You're going to trade down $20 on the open. That's going to wipe out $88 billion of market cap for this company, which is almost a quarter of the entire country's GDP. For some context, the U.S. GDP is $27 trillion in 2023. That would be akin for our country of $6 trillion getting wiped out in one equity and market cap overnight. That would be the equivalent of like Apple. I mean, you get the point for a country like that, for Denmark. Nonetheless, these weight loss drugs, you're going to see some volatility. That's for sure. Because they were close, man, but they're not close enough. You think about it, right? Even if somebody's weighing 200 pounds, percentages, they're losing 50 pounds, and they're not weighing 200 if they're in this study. Okay, they're probably weighing 250, 300, depending on where they are. Maybe females are in there weighing 200. Maybe there are gentlemen in there, but you can't be weighing 200 and lose 50%, man. You'd be at 150. You'd be emaciated. So it's huge numbers. Still, it is huge numbers when you talk about that. But nonetheless, they are paying the price, man, and it's remarkable when you think of, right? They were at 148. You're going to open at 82. So you're down $70 just since July. You're down $70 just since July. This has 4.4 billion shares outstanding. That's over 300 billion in market cap wiped out in a country that only has a GDP of 400 billion. Could have some harsh implications over there, man. Hopefully that's not the case, but nonetheless. All right, jumping back to the PCE we get this morning. So we come in light, and as they say, should help allay the concerns of the Fed officials, right? Maybe the outlook, maybe they're being careful. We'll see where we go from there. But yes, core services, okay, rose 0.2% from a month earlier. Yeah, and core goods prices fell for the first time in 3 months. Consumer spending rose 0.4% in November, 0.3% in personal income. Adjusted for inflation, spending advanced 0.3%. And yeah, consumer resilience during a critical holiday shopping season. It just keep marches, man. I said yesterday there was something you could just take that phrase and just put it in every single bit we've had recently. Consumer resilience, just across the board. All right, we talked about Novo Nordisk. This is the Bloomberg article there, but yeah. Pretty tough when you predict 25% and you miss that mark. Yeah, just some of the statistics. I was looking for some of them. Can't find them that quickly, but we'll see where we go. All right, how about, this is going to be an interesting political season. You have the House rejecting the GOP plan backed by Trump. It's a razor-thin majority, and already it's causing problems. As House Republicans slimmed down plan to try and avert a government shutdown, defeated in a hastily called vote Thursday, several GOP lawmakers joined Democrats. You know, this is just where you look for, there is the possibility for unforeseen volatility here. It doesn't take many, right? Republicans, 38. Democrats, join with them, and you don't need many, man. It misses the mark by a big amount when you look at that many Republicans missing the mark. Think about it, right? That was Trump's plan. 38 Republicans, mostly fiscal hardliners, voted against the bill. And we'll see where we go from there. And then you talk about, now it's interesting, right? In terms of Mike Johnson, already, it's December 20th. Trump isn't inaugurated until January 20th. And do you see the headlines from the Journal? Igniting Republican rebellion. Folks, if there's already a Republican rebellion against plans that Trump has in there, you better watch out for this market in terms of, and I say market, but if you have that type of turmoil, you better watch out, man. Because that's some volatility. Right? Trump-backed U.S. funding plans failure showcases those GOP fissures. And yeah, you're going to see it play out, man. And it's playing out right now. We'll see how we go over the weekend. Elon was out there saying no more spending bills until Trump's in office, and we'll see how it plays out. But man, we're going to have some volatility as traders. That's a great thing. All right, S&P's coming into the opening bell down 25. NASDAQ 100 off 151. Stay tuned, folks. We're coming back for the opening bell.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You're looking at S&P, negative by 30 points. And yeah, you take a look at this market. We were down to 58.66. Slight bounce, then you get a boost on the 830 PCE numbers. They come in a little bit light, and we're chopping around at 5,900. NASDAQ 100, we're 200 points off the lows of 21,006. As I said, keep your eye on that 21,000 mark. And boy, you got volume in these markets, man. You look at this thing, right? Look at these spikes. Even the last 2 days, and you're getting follow through today. You get follow through today. You get it with volume. You put this thing on a weekly. How's that for a weekly top? right? That is quite a red bar, and boy, if you ever get an escalation, folks, we've only been trading for 60 seconds on Friday action, and you better believe on a day like today, these moves, be ready for some moves today, folks. Yeah, maybe yesterday was a slight reprieve. Maybe this bounce is a slight reprieve, but the momentum in this market is lower, man. Okay? You got a little bit of a boost coming into the Fed, a little bit of a head fake, and boom, we've taken it all away, and then some. And as I mentioned, right? You think about it, this market was up 10% from where we were in July, as in you're at about 21,000, not quite, I guess, 22,450, and you wipe it all out in the span of what? 3 to 4 trading sessions, back down to 21,000, back where we were in July. The Dow down almost 3,000 points, 2,400 points right now from the highs that we had up there earlier. The Dow number is 42,000 to keep your eye on. That would back you up. The high from July is about 1,000 points lower. All these markets, right? So NASDAQ right there. And then you have the S&P 5720 is that critical area. And maybe that's where the markets are heading. That's the low that we're at November 4th coming into the election. It wouldn't be disastrous if this market traded back to where we were prior to the election, folks. Okay, yeah, you've gotten quite a Trump bounce, but boy, not outlandish to think that we could trade back to where we were on November 4th, which would be another 170 points where we were below the S&Ps. All right, we jump around to other equities we got going on. You jump over to Nike shares, down 2%. They come out with their numbers last night. Volatility in both directions. They claw it back today on that 830 number, and nonetheless, they're within about $1.83 lower for Nike shares, and boy, it's been a tough one. You look at this chart, right? You got to go back even further. Let's break that one off there. It's a tough one for Nike, man. You're looking for Nike? Yeah, you can make the case that you're basing around these lows that we've seen this year, okay? You make a low of $70 in August. We're pushing 75. You have a recent low out here of 72, but on a longer term basis, you need a bid. That's a monthly. You need a bid in this equity, man. There's your weekly. You know, no strength whatsoever there. Look at this bar that we're in right now from 6 months ago when they came out with their numbers on Nike, just chopping around the bottom of that bar. The low of 74.55. We're trading at 75.91 for Nike shares. Novo Nordisk down 21% to kick off the trading. You talk about it, man. Yeah, $82. You were all the way down to 73. Absolutely remarkable when you compare that to the GDP of the country that they're in, right? All right. And yeah, it is interesting when you look at it. Take a look at this chart the way Bloomberg puts it. Going back to the PCE number that we got this morning, okay? Let me see. It was on the front page when I first pulled this up. Let's see if it's still there. Yeah, it is. So here's the Fed's preferred inflation gauge. I mean, check it out on the chart. 0.1%. Can't deny. Lower numbers coming at you, man. A muted gain in U.S. core PCE. And when you get there, there's the number. 0.11 is the number. And I always say they should really give you 2 or 3 decimal points, right? 0.1 can mean a lot of things. 0.1 can be all the way from like 0.55, maybe you round up, all the way up to 0.145, where you'd round down. Nonetheless, 0.11, and a pretty muted number, especially when you compare it to all the numbers we've had predating this. What's the trend? The trend is lower lows and lower highs in this chart, right? We've had some spikes. You go back to last December, we had quite a spike in the PCE. But nonetheless, yeah, one of the first reports indicating renewed progress on inflation after stalling in recent months. You see this all in terms of the stall. We had PCE rising, all right, late this year, but quite a pullback. And that's why the market rejoicing a bit. But boy, if this can't save it, folks, okay? If this can't save the market, as in, boy, if we get a sell-off, get your spikes up, man. Okay, because maybe everybody doesn't want to wait until the end of the year. Critical area. Do we get follow-through in this market? We'll get you in a little bit of a bounce right now, but as I said, the day is young. Our man Basil Chapman would say, the day is young, and boy, is it. All right, we jump around to some equities. You got Tesla shares off about 3% right now. Yeah, it was quite the number, man. They've had some volatility in both directions. You're now down, what, $66 from the high. Elon trading at his lovely 420 number, 422.78. We jump around. Amazon shares this morning down by 1.5% at 220. Apple, the big dog, down by 1.2. Microsoft shares off by 1.5. Google shares off by 1.4. Meta, only 0.7 in the red. Jump over to Salesforce, down about 0.4. Let's check out some of the airlines. Holding up well. Look at this Delta. Down only 0.4. United is flat right now. They've had quite the run. Check out the banks this morning. JP Morgan flat. Citi flat as well. Wells Fargo slightly in the green. Let's check out some of the retail stocks. Walmart holding pretty well, but off the highs of 1.1%. Target shares in the positive by 0.2%. TJX, up 0.4. Kohl's, yeah, be careful, Kohl's, folks. Anytime you get a stock getting decimated for this, like this, there's always the possibility that you can catch a falling knife and catch a little bit of one of these bounces, right? And that's okay if you want to do that. You want to do that, keep your stops tight. You might be able to. You can make profitable plays in stocks that might be dropping to the downside, but it's difficult because you don't have the wind at your back. You're actually sailing into the wind, right? If you're trying to get pops on stocks that on a longer term basis might be going to zero, the wind's in your face, right? Because the longer term trend, yeah, you can get some rip-roaring rallies like we had here. Now, this was coming into earnings, so that's a different one, all right? As in, you trade higher, you take it away, but look at the run we had. You traded from 16 to 19. That's a 20% acceleration coming into earnings. And then, boom, you trade from 19 down to 14, right? Kohl's is in trouble, man. And, you know, we got a great Kohl's in the mall that I go to over here near Target. Very rarely do I go in there and buy anything. It's very expensive, and it almost has a feel like it should be a discount retailer with the prices of a high-end retailer. That's a problem, right? I go in there, they got great Nike products, very expensive. You go into a Dick's Sporting Goods, very expensive, but you don't have a cheap feel in there. And it's not that it's cheap, but not willing to pay the prices that Kohl's is putting out. I think everybody's there. Where do they find themselves in this economy? Where is their role? Not sure. Dick's Sporting Goods, positive today. All right, S&P's clawing back, rolling negative by 17. Rejecting lower price. We'll be right back, folks.
Ho, ho, ho! The Tiger Dollar Holiday Double Bonus Sale 2024 is here. Amazing money! Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, $2,100 total.
Oh, wow!
But you have to hurry because this holiday Tiger Dollar double bonus sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And how about the Russell? Positive prices right now. There's your weekly, but you put it back on the daily and you get the Russell turning positive. Now, the Russell, man, you talk about a pullback. Yeah, talking about 220 points from the highs that we were at on November 25th. Quite a pullback indeed. That really taking place on Wednesday of this week when you had quite the escalation to lower prices on a percentage basis. But yeah, this market's not getting the follow through right now. And maybe we get a little bit of a reprieve. You got the S&Ps pushing 59.18. We're negative by just 15 points. NASDAQ 100 negative by 115. And the Dow barely in negative territory. We're at 42,787. You're up almost 300 points from the lows that we were at earlier. You know, this one's an interesting from the Journal. This is on the front page, just talking about the complex relationships, especially when it comes to content, right? You got Amazon. They purchased MGM. I think it's MGM, right? Metro Goldwyn, yeah, MGM. Metro Goldwyn Mayer Studio. MGM. $6.5 billion 3 years ago. But guess what? No more bond just yet. Why? Because they're battling with the family that somehow controls some of the creative aspects of there. When it comes to Bond's future, the power lies in the hands of Barbara Broccoli. How about that name? Barbara Broccoli, who inherited the control from her father, Cubby Broccoli. And yeah, they decide when a new Bond can go into production. She told friends she doesn't trust algorithm-centric Amazon. With the character she helped to through big screens. I mean, how does that play out? How does Amazon buy that for $6.5 billion and they make sure they don't have a little bit more control over Bond, of all things? Yeah, the two sides are at an impasse. Amazon needs Broccoli to furnish them with ideas for a new Bond movie, but Broccoli doesn't want to make a new Bond movie with Amazon. Where do we go? It's crazy, man. And there is Miss Barbara Broccoli. Yeah. Gotta love Bond. We need some Bond films. That's why, you know, they're a newspaper. They like clicks, right? And that's Amazon's duo. They're trying to get it done. Look at all those Bonds. I remember, I even loved Bond as a kid, man. We all did, right? Anyway, Amazon dealing with some woes, putting out Bond films, and that is not going to stop anytime soon in terms of what they're dealing with there. All right, what else we got pulled up in this market right now as the market tries to claw back to positive prices? Let's talk a little bit of Bitcoin outflows. So Bitcoin, yeah, quite the pullback on a percentage basis, and outflows will do it. They sure will. How about $680 million? Group of exchange-traded funds on Thursday snapped a 15-day streak of continuous inflows. 680 million was the number. Look at that run. Right? Look at this year. Now, ETFs just came about, okay? So you're going to have a real bias to inflows versus outflows when you're just starting that whole ETF sector. But it's remarkable when you look at the run this has had and nobody's taking their money. Maybe they just started taking their money on Thursday. Okay, pretty typical to see such corrections in crypto bull markets. But yeah, you got outflows. And you got outflows in dramatic markets. And they're talking about Bollinger Bands. And you're talking about breaking below. And on a percentage basis, I love it. You talk about the understatement of the century. Technically, caution is warranted in the short term. That's a great note, Chris Weston. Thank you for the caution. Yeah, we're not due to see a collapse, folks, but you better be cautious when you run like this in Bitcoin, all right? You talk about it. We take a look at Bitcoin. You're trading at 95,000. We were all the way down to 92,000. You take a look at this thing on a weekly. As I mentioned, talked about this one, right? You just completed a 1-to-1 A to B, C to D over the period of just over a year. That 1-to-1 started at about 25 grand. You trade up to earlier this year. You do a nice pullback, and you do it again, and we top out at that level. Folks, unless you're just making the play that you have Bitcoin, you don't care about the money. If it goes to zero, you're okay. Which would be quite a statement if you own Bitcoin after the run it's had, right? But maybe you just got a few grand in there. Maybe you got 10 grand, whatever it is relative to you. Okay, it's okay if it goes to zero. Then that's one thing. But if you're not playing that game, you better think about taking some money off the table when you get this type of a move, right? You're up 300% from where you were last year, just before this time, and you just completed a 1-to-1, A to B, C to D, and look at the way we broke above, right? You break the B point on November 4th, and we finished the 1-to-1, A to B, C to D by December. Yeah. All right, what else we got going on, folks? We got a Tiger Dollar sale. It runs through Monday. Don't forget, don't wait for the weekend. Head on over and lock in that Tiger Dollar sale bonus. You can get up to a 20, a 30, or a 40% bonus. Folks, you can use Tiger Dollars for any newsletter, any service. They're basically like a gift card for TFNN newsletters and services, but you get a 20, 30, or 40% bonus. So you spend $500, you get $600 Tiger Dollars, 100 extra bonus, 20%. You spend $1,000, you get 1,300 Tiger Dollars. So we bonus you 300 free Tiger Dollars in your account. You spend $1,500, you get 600 free Tiger Dollars for 2,100 in your account. If you're a current subscriber, it's a no-brainer, folks. You apply them to your account, and they are automatically used for any future transaction. If you have monthly recurring newsletters, automatically used. Even if you just go in there and you sign up for a live trading class going on 3 months from right now, once they're applied to your account, they're automatically in there. They're automatically used. We run 2 sales like this a year usually. And yeah, this sale running through the weekend. So check it out on the front page of TFNN and get those Tiger Dollars. And we send you a mug on top of it as well. All right, so much for that first acceleration. S&P's just gave up 25 points since I've been talking the last 8 minutes, man. Well, watch out. That would be the ultimate head fake, right? Dow almost got positive. NASDAQ still red by about 0.8% right now. Yeah, with some of these markets not really catching a bid just yet. This is going to be an interesting day, man. We keep our eye on yields. You have the 10-year sitting at about 4.5% when I kicked off the program, and we're trading right now with a yield of about 4.51. And the dollar holding well above 108, and we take a look at that weekly on the dollar, and that is a decisive break above the 108 area. You finish where we are right now on the dollar, man. Yeah, you're breaking above that 108 level. And boy, where's the next stop? The only next stop is up here, where we were at the end of 2022. And you take a look at this thing even longer term than that, right? The only time we've been at this level in the dollar, folks, outside of that one acceleration we got during the peaks of post-COVID, you're going back to where we were in 2002, 22 years ago. Remarkable dollar strength right now, but guess what? It's not stopping. And don't get caught up on just focusing on our yields, right? Remember what is going on in Europe. Remember what's going on in Switzerland, across the globe. They are cutting rates to stem economic weakness. Okay, they're cutting rates to make sure that they protect their own currencies in the terms of the Swiss, making sure. And here we are pausing at 4.25%. Our yield is very attractive. That makes our dollars very attractive. Even if we continue to cut and get a couple next year, it's still going to be attractive versus the rest of the world. S&P's off by 33. We're sitting right at 5,900, folks. We got one more segment. Don't go away. Go check out those Tiger Dollars. While we go on break, folks, we'll be right back for one more segment. Don't go away.
trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. We got the S&Ps right now, negative by 21. NASDAQ 100 off by 137. Market's trying to catch a bid yet again. We got some volatility, man, right? You put this on a 5-minute, you see the swings we got up to 59.30, down to 5900. Even in this 5-minute bar we just got, you trade up, what, almost 20 points from the low to the high as the market tries to figure out what we're going to do in terms of digesting quite a week of action. You get the Russell up by 10. Dow barely in the red, trying to get into the green. And yeah, I wanted to talk about this one before we finish up the program. This one from the Journal. The Fed cut rates, mortgage costs went up. Now, we're all aware following this market, right? But it is interesting that a lot of people wouldn't understand that the Fed started cutting, and they cut by 100 basis points. But in that same time, you've had rates rise. Why is that? Why is that? How about this one? This is the chart, folks. It's what you expect in the future. Just like when companies come out with earnings and they tell you what they did in the last 90 days, the market doesn't generally care as much. It's about what you're going to do in the year forward. Look at the year-end 2025 forecast as they've dropped their current rates. So you've seen the overnight lending rate drop 1, 2, 3. We got to have 4 in there, right? Oh, they did 50 to start. Yeah. But over that time, you've seen the year-end 2025 market forecast go up almost a full percentage point from 3 to 4. Yeah, core PCE, we've been dropping, but is that a little bit of a pop? Well, we got a little bit of a reprieve today. Okay, and then look at how yields have risen over that time as well since they began. But keep your eye on that one, because it doesn't matter what they do right now, folks. It's what they're going to do in the next months and years, and that's why yesterday was a big day. That's why Wednesday was a big day in the markets. Why? Because the Fed said, hey, guess what? Next year, I know we told you 4 cuts at one point. No, we're going 2 this time. We'll see if we get follow-through today. S&Ps, back to a daily. 59.15. NASDAQ 100 off by 130. We keep our eye on the dollar as we finish up the program with the dollar at 108.13. Folks, don't forget about Tiger dollars. Stay tuned. We got Basil Chapman coming up next with the Tiger Technicians Hour. Folks, have a great weekend. Have a safe weekend. I look forward to seeing you back here Monday morning at 9 o'clock. Have a great one, everybody.